The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, traders and traderettes, to another special edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
And it does every trading day. And what else do we have going on out here? The S&P's up about 18 points, and pretty much what I was expecting. Not today. I thought maybe it'd take a couple of days to kind of meander back up here, but it looked like a flat market going into this week. Last week, Friday was horribly oversold, and now we're into a market that's probably fairly range-bound into the end of the year. But I think we're going to have some very big action in individual stocks. That's what I'm planning on, at least. But I'm not expecting a great deal. Options market makers and their bets tell us that they expect that the S&P will close somewhere around where it is right now, at somewhere around 2040 on Friday. At least that's what they're making their bets. And they are the best traders on Wall Street, so you ignore them at your peril. But we got a lot going on here today. So, of course, we've had the incident in France, and a lot of people probably already thinking one step ahead, and that is if the Fed had any excuse it wanted for not raising in December, it probably got one. I wrote in the newsletter this morning that I thought that we're probably headed a little higher out here, but if Lucy was going to pull the football away from Mr. Wonderful Charlie Brown from kicking it again, i.e. a rate hike, Lucy, played by the wonderful Janet Yellen, would be able to do it with this. She'd be able to use that excuse at least for a month or two. And I suspected that the market would see it that way too. So we've had terrorism, probably not anything new, probably won't go away. In fact, we talked about terrorism back in the 1910s and 20s, where people were blowing things up in front of the New York Stock Exchange. It is not new. It is old. And what can you say about it? You try to minimize it as much as possible, but there is very little new under the sun. Probably the most important thing that came out of the last few days for us traders is a clear idea that there won't be any change in U.S. policy. The president was on before lunch talking about what he was planning to do. The reporters asked him 3 times, each time more vociferously, more pointedly, Mr. President, are you going to do anything about this militarily? And the answer was dodged each time. It looks like at least the U.S. has a policy of staying out of it to the extent you may think that that is right or wrong. But I don't see anything or anybody willing to stand up and change that. So I think what we can look at is probably a hotter Mideast, not a cooler one. And, you know, the French, if I said that they've declared war against them, we said that we will try to take their cash away. So there is a deliberate policy, one that many people do not understand. There was a good guy on CNN today explaining U.S. policy because it was beyond what I could have fathomed. But it made a lot of sense, and now at least I can rest my head. It won't just explode from trying to figure out what people are talking about doing in the Mideast. But I think we've got a great deal to think about and chew on. But whether or not this happened at all this week, we've got some other things going on that should support this market into Friday, and we'll be talking about those too. In the meantime, what we want to do is get this party started.
And it's all just a little bit of history repeating.
On this day in 1994, the Federal Reserve raised interest rates by 0.75 percentage point, one of the biggest hikes ever in a single swoop, and the sixth increase so far in 1994. Already, bearish bond analysts turned downright dismal, forecasting that the interest rates will soon go above 8%. Instead, rates fall in 1995, and long-term Treasury bonds have their best year since 1982, returning 31.7%. It's a darn right hard proposition, prognosticating the future, and we've got that too. Anyway, the data continues to come in and point to lower times or lower prices in the major indexes and in stocks. But what do we have? We have and are running up against pretty much Thanksgiving and then the end of the year. It is very hard to get people to push the panic button and sell into the end of the year. We'd probably need something more than we have now at the present time. And generally, if they know that they can get through, at least the street knows that they can get through tax selling season, that it is rare that you sell off. Doesn't mean we're going up, but it's rare that you sell off. Generally, volume continues to wither on the vine as you go into about the 15th of December, and then all volume stops. Of course, if you're short by that time, it is incredibly easy to run shorts out of the market, and most shorts or veterans will try to get out before then, causing a fairly easily statistically referenced biased into slightly higher prices in December. That, of course, means that you come back to the first of the year with very few shorts in the market at all. And if you're going to have huge drops, always where huge drops can come because of the lack of shorts and natural buyers in the market. When it comes down, there's absolutely nobody to pick it up. And one of the reasons why we continue to have shorts, a lot of people deride them from time to time. But one of the things that everybody knows is as it comes down, shorts will cover and they're moderate any kind of downside. If there were no natural buyers on the other side, then we'd probably have crashes a great deal more than we have these days. Anyway, we were talking about, for the first time in a decade, imports fell both in September and October at each of the three of the busiest U.S. seaports, according to data from trade researcher Zeppel Corp. It was a big article in the Wall Street Journal over the weekend. Don't think that there's anything else to tell you than that. We've been looking, of course, at the Baltic Dry Index. We'll probably look at in the next segment. But it is and continues to tell everybody that the economy around the world is shrinking somewhat, although commodities may be close to at least a bottom through the end of the year. Seeing a couple of charts, maybe we'll get a chance to look at those later in the day. But no good news out of the shipping ports. In fact, we talked about last week about the giant container ship company saying that he thought that the markets need to change that GDP down by another % or 2 next year. I just suspect that we're going to see exactly what we've seen in the past and what research, real economic research has shown. We bring up from time to time I think it was 2003 or 2002 Nobel Prize winner, because he spent his entire life trying to say that real experiments have to be used with real money. That standing back and observing probably wasn't enough, and is the equivalent of not astrology, equivalent as a science, as just looking at stars. You can't really test anything. You can predict stuff and hopefully it comes true. But a lot more like that. Mark Andreessen, if you haven't been paying attention to Facebook, or as I call it, Spacebook, or DeFacebook, or whatever it is, I think it's some kind of cult. but it continues to make me think that when the earnings came out, didn't impress me at all. The initial reaction was lower. It looked to me like they'd run these stocks higher. And what we do find out from filings through last week is that Mark Andreessen, one of the earlier Facebook investors, he was big into it by 2006, 7, and 8, has sold over 1.5 million shares of Facebook since its earnings came out. Now, that's roughly $160 million, according to the Securities and Exchange Commission filings, since October 30. Andreessen has offloaded more than 73% of his total ownership in the company and 90% of his Class A shares. Those are shares that don't carry any voting rights. But if you remember this IPO, this was one of the few IPOs in which the CEO carries 60, in perpetuity, by the way, 60% of the voting rights. So there is, it doesn't really matter if you have shares and voting rights in it. Just doesn't matter. Yep. But when that came out and saw the earnings, I was pretty sure the thing would start to sell off within a day or two. It held up a little bit better than I thought, but the selling has finally come in. We got down to $100. It's going to bounce around here for a while, but it's going to be very hard. There's many reasons to sell. There's only one reason to buy. You think it's going higher. But it's going to be very tough for anybody to bypass Mark Andreessen's huge sell all at once. He had pre-positioned this into earnings, and I don't know what else you can say about it other than the fact that he is, of course, on the board and may know more than us. Now, this was pre-planned, but I think pre-planned 6 months ago, so he couldn't say that he had some kind of insider knowledge. But he was probably had enough insider knowledge 6 months ago to already know that we were coming on some kind of top, at least in Facebook for a while. But it's off 83 cents. That's no big deal. Of course, got to about $110. But we're starting to see more and more of these big wheels dumping shares as they can and as the market will allow. Other things going on, we talked about why this market's not going down this week. It is expiration week. That's the first part. Second week is its IPOs and some big IPOs. And it's some IPOs that are going to make more people on Wall Street filthy, stinking rich. And, of course, nothing like a market wanting to go down will stand in the way of the Wall Street guys who make a tidy amount of cash off of pushing out new stocks. They get, basically they make a deal with the devil. That is public companies that want to go public. And we'll talk more about that. But we've got two big ones coming out this week. And Silicon Valley, the investors all have their fingers crossed. We'll tell you why when we come back. But that'll be it. You can give me a call at 877-927-6648. You can email me at pat@tfnn.com. And of course,
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we're back, we're going to talk more about this week, but my guess is that there's going to be a bullish bias through most of the week. Not that we're going that much higher. I just don't think we're going much lower. In fact, I suspect we could have a couple of days out here where we just do almost nothing going into Thursday. Of course, on Thursday, Match Group is going public, and it's going to spin off a lot of the shares. Match Group owns a couple of dating services. I guess that I use that loosely. It's Tinder and OkCupid. It's more of a hookup site than a dating site. Its SEC filing suggests the company's worth about $3 billion. And, of course, also on Thursday, we have the IPO with Jack Dorsey, who, of course, is the CEO also of Twitter. And, of course, that one will go out with about 5.3 additional million shares to investor to raise the same amount of cash that it wanted to early on. But a lot of people are thinking that this is their last chance to get onto the gravy train before the window closes. But Silicon Valley, the investors, the vulture capitalists, all think about the day that they can get their cash back. And when markets are going bullish and gangbusters, it seems like they can't fail. When things aren't going well, it seems like they can't win. And they probably don't, with these kind of valuations, don't have a lot of staying power. But we're going to continue to keep an eye on those. But if the street can do anything, they're going to make sure that the market is going to be sanguine enough to take a bunch of shares off of innocent investors' hands. As we continue forward and upwards in the show, the first thing we want to look at is Clovis Oncology. had bad news on an update on its trials for a cancer drug, and talk about heaven and hell. You went into Friday somewhere around 98, and you came out today at about 26. Tried to bounce a little bit more toward the bottom of the range out here, but the market took this. I read the press release. There must be more to it that maybe everybody else knows in the industry, which is one of the reasons why I don't spend a lot of time on biotechs unless I really know a great chart pattern that looks like it's irreversible, mostly because there are so many things going on inside these companies and no one knows. A lot of times the investors inside don't know. Even the CEO doesn't know. You get these kind of government bodies that come up to some kind of decision and they don't let anybody know, and it never sneaks out until, of course, it all hits you in the face. And certainly that's what Clovis Oncology is doing today. Let's see what else is going on out here as we get ready. Of course, a lot of the companies in the the defense industries are doing well. Lockheed Martin was one of the ones that was up, even when the market was kind of a little down this morning, although it was never really that down. It was just a little up. Not a lot of volume out here today. Of course, you did kind of break the previous highs out here when we went up to a high on October 27th. That was 1.3 million shares. You know, we've got about, we're probably going to get close to that today, but it looked like this range of about 213 really didn't have a lot of juice going through it. We are now with, of course, the additional news over the from Friday night, thinking a lot more about a protracted war in the Mideast. And what else can you say about that? All those companies, well, not all. I was going to say that a lot of those companies are figuring out in the defense sector that there will probably be a lot more shooting than less as we go ahead. Of course, anybody that's in the business of travel is going to have a tough time of it. PCLN. I had already, we talked about this last week, looked at these travel companies being rather weak. I thought maybe it had been done. Of course, they got hit yet again today. That is Priceline. But any of these companies that are surrounding travel plans will probably, at least for a few months, be a little weaker out here. A lot of these had made pretty good signals that they had made highs without any volume. Priceline was one of those. I couldn't guarantee it. I wanted to go short this thing. But do you short a $1,500 stock? I couldn't. Look for options, and they were, I think, $50 with a projected move. Even that I was looking at, the risk reward was horrible. We just had to go and find something else. When we come back, we'll look at a few more of these. Expedia, how about that?
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we continue to go up. We've got a few running bears out here as we're up almost 22 points on the S&P. So we'll play some little running bears out here. Just a taste.
Running
Bears.
through the bushes,
Bears.
dodging bullets from tree to tree. Running
Bears. Through the... Anyway, that's exactly what we have. We've got a few running bears out here up at 22 points. A volume is 2.4 billion shares. So it's not all that bad. But again, I think we're going to have a lot of chop, but look for a little bit of short covering, I think, throughout this week. What else do we have going on? Expedia. We're talking about travel companies after something like this tend to really get slammed. Of course, gap down in Expedia today. Of course, this is after earnings really propelled the stock higher on some decent volume, but it didn't take long. And we've talked about this where we've got a lot of stocks at these highs that do pop out. They do even pop out sometimes with volume and pull right back into the trading range. Expedia was kind of at a support level on Friday and popped back in. The question is going to be over the next few days, what does this stock do? Will give us a good indication of probably what the rest of the sector does, as it seemed to be the strongest one of the bunch. Other stocks out there, get that in Expedia. C-Trip was down a little bit. In fact, a great deal. That has turned around. CTRP was down at a low of almost a little under $94 today. on its move down, but doesn't look as bad as it does or did earlier this morning. And well, the travel companies, at least some of them, are still up here. I would love Priceline to run back up maybe before the end of the year. If it could make an ABC, maybe I'll get a chance yet to buy some puts on that thing for an ABC down. Other stocks of interest out here. Of course, all the airlines at about 10 o'clock were down. Take a quick look at DAL. I imagine a lot of these have returned to the... they have not. We've got Delta Airlines back into the lower trading range, going back to August 18th, that set up that lower trading range. We're below that high of 48.30, 9.9 million shares. What do we have out here? 47.73 out here. Volume has been kind of good the last 3 days. It's going to probably exceed that, though, today. So we're going to have a slight increase in volume. And if we look at a bigger version of this chart, the question has been, or is going to be, did this thing make its big high a week or two ago? The January 23rd high had 16 million shares. We got into that and went a buck higher on November 3rd, but only got 11 million shares. Now it's solidly back in the trading range, and you've got a nice gap out here that is at about 42, let's call it 42.50 down to 41.50. It goes back after kind of a big reversal on that August 24th low. So probably tighter trading ranges setting up on a lot of these stocks. See if anyone else. Let's take a quick look at AAL. I imagine the chart looks the same on it. And just a nice little gap down. But no biggie just yet. But nothing exciting out here. JetBlue, yeah, they're pretty much all off out here. I don't see anything exciting. RJet, of course, was hit the hardest. And, of course, that's the Republican Airways. I don't know why that, doesn't look like it. Show that was our off 5%. Yeah, wonder why that is. Maybe it was earlier. To see if anything else out here that we really wanted to look at in this list before I go to my list. See anything else? Don't see anything. Let's go to my list then and start looking at stuff. It's been kind of interesting to see these biotechs. We'll look at the IBB, but this caught my eye over the weekend. This is Bluebird Bio. And, of course, it is generally a fairly big buying pattern that had been negated. A high volume move down on November 5th, but we won't be back at least into support levels. Originally gapped on December 9th, 2014, did so with 8.2 million shares, and basically got right back into that gap with 8.2 million shares a week ago. We've kind of been meandering back around here. I'm thinking that probably support lies right around the $60 level, and we could see this thing kind of drift back into that gap. IBB. Let's take a quick look at that. Not much of a day out here. We got a little bit of a doji. I'm thinking that this is going to be one of these in the tax selling area. What I dislike is the volume on September 28th really has just been lighter and lighter and lighter and lighter. And that probably tells me that the selling pressure has become lighter and lighter. This thing's kind of bouncing around. We got up to 341.25 on November 3rd, but really not enough juice to break even the October 5th high that had 3.4 million shares at 323. So we went by, didn't have volume. We pulled back into this trading range. Also, kind of a nice spike the other day on the 12th. Pretty much wiped out a lot of folks and then pulled back up and closed not higher on the day, but at least not painfully bad on the day. We've been going sideways for about 3 days. Now we've got a doji out here with a very, very light volume. And in a expiration week, could we get the same kind of move that we had last expiration? And I think the answer is yes. I'd love to see this thing get pushed down over the next couple of days and maybe ready for another Friday pop. But I don't always get my wish. Sometimes I do. What else do we have here? Boingo Wireless. Not getting good news out here. This thing's breaking out. It's August 24th low. It had 600,000 shares. It's already done 600,000 shares today. So no Oingo Boingo in Boingo Wireless. Hope everybody remembers that band. A wonderful band. Oingo Boingo. In fact, I think they did a reunion concert just a week or two ago. I think I saw news on that. Not a lot of other stuff that I'm going to really spend time. We'll probably go back to some other charts and maybe even some Gartley patterns and see how they developed. One of the things we talked about at the beginning of the show was the volume in some of these commodity ETFs and ETNs. A lot of them don't look good, but on a volume basis, testing the August 26, 27, 28 lows with decently lighter volume. August 26, we got into that with $14.33, 3.7 million shares. Just had 1.5 million shares as we kind of broached that low today. As I said, not a lot of pressure to go higher, but at this point, not a lot of pressure to go lower either. So we'll be looking at a few of those. Let's take a look at, we don't always look at the Gartley patterns out here. They look kind of interesting to me on Friday. Maybe we'll go through a few of those here. And what else do we have? Anyway, I had a little one in Araya Pharmaceuticals. Looks like it kind of completed that today. The energy is about the same down on the D to C as the X to A. So I don't know if you can make a great deal out of that. It's one of the smaller ones. I'm trying to remember the one that I wanted to see out here. Cheniere Energy. This one was looking very good on Friday. And, of course, today we saw a lot more people stepping in and filings on Friday night after the close of big players like Icon stepping in and adding more shares and other people getting in. A little bounce out here, especially for a sector that has been so horrible. This is one of the better looking Gartleys that has been out here in the last week. And when you look at this one, the X point to the A point, the energy in it was about twice as the energy from this November 4th C point down to the D point on November 12th. Not a bad looking move out there. And the next thing you probably want to do is look after this is look at UNG and see if there's any action out there. And why this thing doesn't look like it really wants to bounce significantly. It looks like that there is at least maybe some kind of floor being put in UNG. It's up on very light volume today. Again, I'm not saying this thing has done enough work and consolidated enough to where it could have made a floor, but maybe the next one out here would be close and maybe a potential buy, but too light a volume today on a lot of those. LMCA, Liberty Media. Of course, this one had been pushed and kind of a nice Gartley pattern out here. When these things do work like this, though, and come into bigger Gartley patterns, let's take a look at this. You've got kind of a decent move out there. Not as much as I thought, though. LMCK, another one coming in. Oh, this is the other version of this thing coming in. Same thing, pretty much a bearish butterfly pattern in this. The energy should be in this LMCK be a lot more in this Liberty Media vehicle. Of course, you had a ton of volume with them announcing, I think, a proposed split a couple of days ago. Got to $40.61. But that probably tells you that that's about everything you're going to see in this. I don't think there's a lot more to write in or home about on it. Memorial Resources, I don't see a lot in that. What else do we have here? MLP funds, we can skip that. Yeah, this is kind of an interesting one. Don't know a lot about the stock. but it certainly looked like bearish butterfly with a nice little Gartley bounce out here. It's one okay. Let's find out what these guys do, because I do not know. Gauges in the gathering, processing, storage, and transportation of natural gas. Yet another one out here with maybe a bearish butterfly buy pattern. But interesting. A lot of volume, or too much volume, of course, from the November 13th low out here. You did complete that, but maybe this thing's going to bounce a little bit, come back down there, see some very light volume at 27.44, and maybe that would be it. Let's kind of take a look at some other the charts from last week and see how they're doing and check back in. 2046 on the S&P cash, 23 points higher. Who would have thought? Who would have thunk? I figured a lot of people were nervous over the weekend, thinking that the market would open up a giant sinkhole and suck all the people that went long on Friday into it. But things change. Let's take a look at that here. Our area, pharmaceuticals. We talked about this one for a while. Rye? Yeah, who knows? This thing made a high volume low. Looks to me like this thing is headed back down in there, but probably not a lot to look at today. And Cheniere, we talked about that. CTR, Clearbridge, that's why I was saying some of these stocks out here look like they're getting fairly light volume finally. So we may have at least a temporary low in some of these commodity stocks. What I was looking at in Clearbridge, CTR as the symbol, is this September 30th low, $13.47 with 500,000 shares. Got into it with 23,000 shares. Didn't touch the low, which I probably would have liked. And we've got light volume today, but on the bounce. But a test of 1347. One more out here, we might finally start seeing some of these stocks find a low. USO Daily. I think we talked about this last week, that I thought maybe Tuesday, Wednesday, we could get a bounce. We got a little bit of one today. What I would love is to see maybe some really bad news come out on the Wednesday EIA numbers, and that we'd come back and test on the USO this $12.37 low from August 24th. Looks like we're almost there. The volume looks good. So I'd say, yeah, you've got on the charts a decent bottom. But again, any commodity stock, I want to see it pierce. It's not even a question. I've got to see it pierce at the previous low, even if it's on significantly lighter volume, before I bite, because I've been bitten immensely by Pac-Man by not waiting for commodities to actually pierce the lows and run a bunch of people that are long out. Because it seems like without a washout, it's always like you get a washout eventually. So I would just wait for one more washout. I think that could happen in the next day or two. Wednesday is a perfect setup for it. If we get yet another build, we could probably go down, hit those lows, find out that there's not a lot of volume there, and the thing pop back up. And that's where I would say the buy in oil would be. Anyway, maybe it'll be the week after Wednesday, but I think you're going to get that low tested. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, if you were like me, you were out doing something on Friday and you cut the news and you were pretty sure it was the end of the world.
It's the end of the world as we know it. It's the end of the world as we know it.
And no, it wasn't the end of the world. It wasn't something that we like to see. But at the same time, I talked to a lot of people that were sure that we were going to open up 50 points lower on the S&P this morning. End of the world, all that kind of stuff. You know, I just didn't see it. Didn't see it Friday. Didn't see it this morning. Frankly, we're a little higher than I thought we would be by the close today. But it just doesn't pay to get that wrapped up. In fact, I spent a lot of time working over the weekend trying to enhance at least some of the tools that I use for divining the stock market. But I happened to be talking with another well-known trader this morning before the beginning, and I'm working on some new tools, and those tools actually showed to me that there was no short interest in the market over the last few days, and pretty good indication that the big chieftains of the market weren't expecting some severe downside, at least in a few of the things that we were looking at. And so I thought my call for expiration that's probably going to be around 2040, 2060 on the S&P cash, probably pretty close. It may even be a little higher now that we washed out all the weak hands, and of course that they've looked forward to pushing out more IPOs this week. But just keep an eye on them. We've got a lot of stuff going on out here, and we'll keep an eye on it. Spectra Energy. As I said, a lot of these stocks have come down. They have not pierced, but they have tested the low candles. In this case, Spectra Energy, don't know a lot about this company. SE got into the September 29th candle that had 9.1 million shares on Friday with 4.1 million shares. You got a little bounce out here today. Energy is not exciting. But if we're looking for some kind of lows in some of these energy companies, I suspect this is the beginning of the bottom making process. Again, any of these out here, I want to see these things actually pierce the lows or the common or current lows that are hanging out here. So I'd love to see if we could get a test of 2522 at Spectra Energy. I think we've got some interesting setups in this market, especially, as I said, going into the end of the year. As volume decreases, it's going to start decreasing after Thanksgiving a little bit. By the 15th, normally, we're looking at volumes that are maybe 3/4 or 5/8. As you get into the last week, you're looking at volumes that are half or less each day. And I don't think that this year is going to be any different. So the question is going to be, if we can't blow out the bottom probably this or next week, then we have probably a good chance for short covering right all and up to the end of the year. And at least my thoughts are that without a giant surprise out of nowhere, which they do occasionally come, it's going to be very difficult to push this market probably down much further before the end of the year. So I think we have some good trading in between now and then. Like I said, if you follow me in this week's newsletter, the daily newsletter, I've upped my game, I think, significantly. I'm going to explain it in tomorrow's newsletter. But a lot of what I've talked about and done webinars on trading stocks into expiration, I think just got a whole lot better. And I'll be explaining that tomorrow. Probably talking a little bit about it on the show. Anyway, we will see you tomorrow. Same bat channel, same bat time. As always, hang on for another 2 hours of Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.